The crypto space has been getting absolutely decimated since the beginning of this year. Of course, we've seen monetary policy shift from the central bank, especially in the United States, has played a big part in this. But crypto has gotten particularly hit along the way as big players have gone bankrupt. Lots of people have become, just blown up with leverage. There's all this insolvency issues across the space that has made this problem way, way worse. Okay. And today we're getting news about some specific instances with some big players in the space that's makes this look a lot worse than we might have initially thought on the surface. We're talking about what's going on with Celsius right now. So I'm going to talk about that in this video today. We're going to look at a lot of other things that have happened in the space. Also some good news. All right, it's not all bad news in the crypto space, but this is definitely something you need to understand if you're, trying to navigate this space. Just say, who can you trust? What should you be doing with your money? How should you spend your time if you're a developer? All that type of stuff, right? So before we get into that, if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something you're interested in, then smash that like button down below for the YouTube algorithm. Subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. And of course, if you have been sticking around but you have not caught my announcement, we are relaunching the Blockchain Bootcamp next Thursday, all right, July 14th. So make sure you hold your spot with the link down below. You definitely don't want to miss this. So we got people jumping in the chat here. We got technically David Stone, Chicken Nuggets, Jaya, Mark. Let's see here. Xerox Boy. Let's see. M4. I'm not sure how to say the rest of your name there. Let's see here. Awesome. So let's go ahead and jump into this. Let's talk about the Celsius disaster that is getting a lot worse than we initially thought. So let's kind of set the stage for this. So of course, like I was saying before, crypto has been getting taking an absolute beating all year. Okay, ever since the top of the year, it's been basically down only in terms of crypto prices. Of course, a lot of people left the space. They're just like, hey, I'm done with this. But, we've seen the same thing across the stock market. We've seen the same thing across many other assets, right? There's definitely a storm brewing on the horizon in terms of the broader economy, and crypto's, getting drugged down with that. So, now crypto has had its fair share of trouble specific to crypto, aside from what's going on with everything else, because of so many different blow-ups that have happened, okay? So whenever we've seen, the price of Bitcoin drop sharply, okay? These were highly correlated with certain big players in the crypto space blowing up, okay? So you see these big price moves here, boom. These big price moves here, boom. These are highly correlated with some major events like the Three Arrows Capital blow-up that happened. Talk about some of those in the live streams. Also, what's been going on with Celsius and other different players in the space, okay? And that's what I'm talking about right now. So if you're not familiar with Celsius, basically, it's a platform that lets you deposit cryptocurrency onto it and then earn yield, among other things, right? But that's kind of one of the main pitch. We saw a lot of these different, entities pop up during the last, big leg up in crypto. Or for example, like if you held Bitcoin and you wanted to earn interest on your Bitcoin, earn yield, okay, you could just sign up for one of these sites, go deposit crypto onto them, and then you would earn interest, right, on your Bitcoin, which you can't do natively. You can't. Bitcoin's on a proof of stake blockchain. You can't lock your Bitcoin up to the network. You can't really natively use your Bitcoin on DeFi. Of course, you can wrap it, go transfer it to a blockchain. But the vast majority of people who just hold on to Bitcoin, they're like, I'll just sign up for a site. But there's a big problem with this. We've had issues with, Celsius not paying back, not letting customers access their funds. And today, we have. Let me just pull this up here. Today, we have a story of basically Celsius accused of fraud in a lawsuit by a former money manager. Okay, that's talking about how Celsius, like in the lawsuit. Okay, so I'm gonna be very clear. I'm just gonna talk about the language that's in the lawsuit. We have to have time before, all the details come out. But I'm gonna stick to the details in the lawsuit because again, I'm gonna let the courts duke this out and see what the actual truth is for sure. But we just take this at face value. All right, very clear here. Take this at face value. Stone referred to Celsius as a Ponzi scheme in the actual complaint filed, where basically. What was happening is all the customer funds that were, deposited into Celsius were essentially then being used and levered up and taken on to go do other things, traded, lent out, whatever, right? Use as collateral for other things. And that's essentially where the yield was coming from. And then essentially when the crypto bubble popped, or the everything bubble popped, and crypto started getting drugged down. And then, basically all these funds that were getting, used, out and doing other things, we're not going to give those back to customers right now. And so hence we've paused withdrawals. Okay. So you can actually go read the filing. All right. Get into all the details. Again, I'm taking this at face value. What's in an actual filing that's been submitted to the courts. Again, we're going to let the courts duke this one out. I'm trying to stick to what we know from credible sources. I'm not trying to spread fake news on this channel. I'm not trying to just not trying to just gossip about, hearsay that's flowing on the internet. I mean, this is what's actually in a court filing. Okay, so we're gonna try to stick to what we know here. But let me kind of explain, why this is a bad thing for crypto. But how there's some good silver lining to this. Okay, so I mean, part of the bad thing is like this is like painting a target on our foreheads for regulatory oversight. But let me just kind of illustrate what the issue here is. So, this is an example of basically what's happening. You take, let's not necessarily pick on any individual, but this is what a lot of these centralized crypto banks are getting accused of. Okay. So basically, let's go back to the example I was talking about earlier where you deposit Bitcoin into this centralized platform. It's just a website. They accept, Bitcoin deposits, other cryptocurrencies as well, right? And then you're going to earn yield on that. But the problem is you have no idea what they're doing on the back end, okay? They could be lending, borrowing, trading. They could be flipping, speculative NFTs. They could be doing super high risk yield strategies, like just levering up and going further and further and further and further. And you have no idea. There's no transparency into this. You don't know what they're doing with your money. Now, the same is kind of true for your own bank. Okay, that's not that different. But there are definitely regulations on banks. I mean, we do have a fractional reserve system, which has requirements on how much depositors they have to keep on hand, all type of stuff. I realize that a lot of people say, hey, it's not any better because then it's just going to enforce a minimum, and if they get blown up, they're going to get bailed out. I totally get that, but I'm just saying. Right here, there's to my knowledge, there's not really a whole lot of regulations, especially if we're talking about something that's operated in some sort of offshore entity that has zero regulations. Anyway, so the bigger problem is there's no transparency into this. Okay, so let's talk about other sources of crypto yield, though. How this could be a good thing for things like DeFi, okay, decentralized finance or open finance. Now, one big benefit here, let's say you have a DeFi bank and you deposit, let's say ETH, for example, like on top of the Ethereum network or some other token, right? You could have this DeFi bank and that earns yield, but there's complete transparency into how that yield is being generated. That's the thing that people don't understand is like, and I'm not shaming anybody for not understanding. I'm trying to help understand. Whenever you're getting yield with a bank like this, the yield has to come from somewhere. It's not just magically, generated by the Bitcoin itself. That's why these services exist anyway. So they're basically giving you yield by like going out and doing risky stuff with your funds, and then they're just going to profit off the difference and then pay you this like small amount of interest. Okay. But then the problem is, it's like not your keys, not your crypto, and you've handed over your crypto, and they're like, well, we're not going to give it back right now. You can't get it back. Okay. So with DeFi, it's a totally different story. Of course, when you deposit, there's always going to be smart contract risk. There's always wallet risk, custody risk. I'd get that. But there's this big benefit of complete transparency. Like you can always see what's happening with that money on the other side. And during these massive liquidations and all this type of stuff, during the big crypto crash, we saw DeFi hold up pretty well. Like most of the major, like the decentralized stablecoins held their pegs pretty well. The decentralized savings and lendings platforms, like they didn't blow up. Okay, like it was actually a really good thing for decentralized finance and just the actual technology itself. Okay, sort of stress testing it during this major time. So that's actually a big thing. And so part of it, trying to educate everybody, like where does the yield come from this case? Well, it's coming from the demand, all right, to borrow crypto against, the deposits to do things like, still risky business, lending, borrowing, trading, all that type of stuff, but there's still complete transparency and auditability on chain. And then also you think about yield for things like, proof of stake blockchains like Ethereum, like where does that yield come from in case you're trying to figure out like, hey, when I get interest, what makes the interest? Well, you're getting it from two sources. Like when you lock it up on a blockchain, like a proof of stake, like Ethereum, for example. Well, let's say you stake your ETH on the network whenever Ethereum is your proof of stake. Well, you are the blockchain's creating new cryptocurrency, all right, to pay you as a staker, but you're also getting fees from people who are using the network. So transaction fees. People send a transaction. They, part of that fee gets burnt. Of course, that's why ETH's going to become deflationary, most likely, after proof of stake gets turned on. And then, part of those fees go to you, part of it gets raised from the network, but you also get new crypto that's actually created from the blockchain. So the lessons in here are that the yield comes from somewhere, or you have to understand, and sometimes if you don't know where the yield comes from, you might be the yield. And so the yield comes from somewhere. Always understand where the yield's coming from so you understand the risks and trade-offs that you're participating in. This was a relatively good thing for DeFi because it shows that like the transparency is a big benefit, okay, and that all these DeFi platforms really held up during these mass liquidation crises. And the centralized services, a lot of them did not, okay, because there was no transparency. Like these were actually, these weren't really Web 3.0. Okay, they might have sort of decentralized in name only, DINO, because of course they might accept cryptocurrency deposits, but they did not embody the values of decentralized finance because it's totally closed system. You have no idea what's happening, and then it's not non-custodial, right? Like when you want your money back, you can't get it. So it's sort of like F in the chat for some of the CeFi lenders for sure. Of course, a lot of the other big ones, have gone bankrupt. We're seeing lots of other things like, Voyager seeks bankruptcy protection amid crypto credit crisis. All right, a lot of these folks kind of caught with their pants down because they were, lending to some of these funds that also blew up. So we're talking about the contagion risk in crypto. Whenever you see a massive fund blow up, well, that contagion spreads to other services because they were borrowing money from other people in the space. Okay, we're seeing lots of other stuff like that. Let me find it. So it's bad for the crypto space. But let's talk about some silver linings. Of course, my webcam's doing that thing again, or my main camera. I'm not sure why it does that. Hopefully it'll come back to life here. So it's bad for the crypto space in that regard. I think we've painted a target on our foreheads for regulation. I think we've probably expedited that process. Again, I think that crypto regulation is coming. Sorry if I can get this to work. I'm not sure why it's doing that. I think crypto regulation is inevitable. I think the best thing we can hope for is trying to get the best trade-offs that we can get. Okay. I think we probably just stacked the decks against us a little bit with some of this type of stuff, because of course there's gonna be lots of regulators who are familiar with the law, not in history, and not familiar with crypto. They'll be like, this suspiciously looks like what happened, with the great financial crisis around the Great Depression, where like, these private banks didn't have this money to pay back, So it suspiciously looks like the same thing, and so we saw what happened back then. So we should take these brilliant learnings from history and apply them in this space, and we're going to slap some big old regulations on you. So that that is very well could happen. So let's talk about. Let's see, I saw a funny comment in the chat. So that definitely could happen. Let's see here. What's the worst that can happen? So it says, FUD, nothing I say is concrete. Not your keys, not your coins. Yeah, definitely. Stricter capital gains taxes. Well, here's the other thing. This is a really great reason why you don't want to tax capital gains. Unrealized capital gains. Because basically, that's what's going to happen is you're going to see all this type of stuff. So somebody says, this guy is laughing and smirking when people's life savings are in Celsius. So that's the other thing. I'm not trying to be insensitive at all to anything that happened in Celsius. I'm trying to bring the actual truth to light about what's going on with some of these services. The other thing is, I was talking about this a lot throughout the entire thing to be very, very, very careful with how you participate in the crypto space. I've tried to be very. That's been one of my main missions on this entire channel, is to educate people about the actual technology itself, what you're getting yourself into, so that you can make good decisions in this space. And of course, in the day, my biggest mission on this channel is to help people get into the industry and learn the skills to do that. But especially when you're talking about protecting yourself in crypto, you have to understand how this space works in order to navigate it properly. So let's talk about another thing, which is, what does this mean for like the crypto prices and crypto space? Because when you're talking about this yield, right? You see this yield, these different models I'm talking about, like where basically you have these centralized banks, okay, and then basically they're going and borrowing and lending things, and then maybe like they're lending to a fund, right? And that fund is going out and taking that money and like levering up and doing things with it. Same type of thing with DeFi. I think one thing that a lot of people understand in the crypto space is that just creates all this hot air and leverage in the system, okay? And that's one of the reasons that, you have these bubbles in the first place. So basically, like, I think there's kind of this naive idea, and I'm not trying to like, criticize anybody for this, understanding this, but a lot of people don't understand that, like, when you see, all this crypto prices go up over time. Actually, crypto's a little more green than it has in the past. And you see these market caps, right? You see Bitcoin, getting to like $1 trillion market cap, right? And then, you see total crypto market cap going up to $3 trillion. Well, it's not like there was $3 trillion of US dollars sitting in bank accounts across the world, and then those $3 trillion just got evenly spread out into the entire cryptocurrency space, and then like $1 trillion went into Bitcoin, $500 billion went into ETH, and then you spread out the remaining 1.5 trillion or something across all these other different cryptos evenly. That's not really how it works. Okay. So one of the reasons crypto goes up really fast, one is because it's a relatively small market cap compared to other things. Like when you're talking about altcoins going down here, like let's say you have an altcoin that's $100 million market cap or something like that. Like that's pretty small on the grand scheme of things, and it doesn't take much buy pressure when you have thin liquidity, right, on a $100 million market cap coin to make it price go up like crazy. That's why you see like 10x, 100x's in crypto. That's one reason, is because those smaller market caps are easy to move. But the other reason is because of leverage. Okay. So like I was saying before, is like you don't see Bitcoin. It's not like just $1 trillion into Bitcoin and then $500 billion went into ETH and the rest just gets evenly spread out. What happens is you have money going something like Bitcoin, and maybe not even all just money. Some of it could be IOUs or borrowed money. But anyways, let's say there's people buy a bunch of Bitcoin and they take that Bitcoin and then they basically take out a fraction of it and then borrow against it, right, with a stable coin. And then they go buy something else with that, right? So you're talking about now there's extra money in the system that you can create buy pressure on smaller cap cryptocurrencies. And then they like are trying to go flip that crypto. All right, maybe they do it, and then they go borrow against that, and they deposit it somewhere else, and they earn yield. And then maybe the place that you're earning yield is taking your money and borrowing it, and then doing things in the back end, and maybe giving it to a fund who's leveraging it and then earning yield and then taking that and selling. So I'm saying is there's this huge daisy chain of funds. So in a thing that's got like $3 trillion market cap, there could be a fraction of that of actual just like green cash, you know what I mean, that entered into the system to make that happen. And so when you see all these, centralized lenders or just funds or anything blow up, what you're witnessing is a lot of the buying pressure that was propping the crypto space up in the first place and making it accelerate so fast just get wiped off the face of the earth. Okay, and so that's one of the reasons that crypto prices have remained depressed, and it's going to be harder for them to increase, is because a lot of that sort of leveraged demand has subsided. Okay, and a lot of those players that can take those big risks have just got their legs chopped off basically. So now that's that's kind of what it means in the short term. Now, of course, the bigger picture, I think the bigger factor at play definitely is going on with the broader economy. All right, because of course we've seen crypto having a major headwind since the beginning of the year. Okay, with policy by the central bank. Okay, United States, in particular, raising interest rates. All right. Quantitative tightening, and that's been affecting all assets. So I think that's the bigger factor here that's giving crypto headwinds. But we have seen these other types of things really exacerbate the problem, all right, where when we see all these players blow up and a lot of the leverage get flushed out of the space, we see sharper declines in the price of crypto, okay? And so, what's it going to take for, in my opinion, for recovery really to happen is, we need to get some clarification on what's going on with the broader economy, in my opinion. And then, we've also got to just have some health back into the crypto space where, a lot of these big players that got blown up, we kind of need some fresh energy in the space in order to see the same types of things that happened before. Because you have to understand also, like as the market cap of crypto, continues to grow, it gets harder and harder to generate the same types of returns on, big assets. And I mean, that's evident to people who've been here for a long time. But a lot of people who are kind of new just don't understand that. And that's okay. That's what this channel is for. But, we need a lot of those big players to get nursed back to health in order to, march on. So let me know what y'all think in the comment section below. This is why I stick to DeFi. Yeah, totally. What's a good project to make in Solidity? I have a basic understanding and want to start working on a useful project. Any suggestions? It depends on what you want to do. I would definitely try to build something. I think the best thing to do is to try to build something, like, especially if you're just getting your feet wet, is try to build something that already exists, but like don't copy the code. Just think about how it works and then try to actually create it. And I would try to do it for something that's a real blockchain use case, like a decentralized finance use case or a NFT use case. And it doesn't have to be perfect, okay? Especially if you're just trying to do it for a portfolio project to get somebody's attention to say that you have the skills. Like, let's say that you built a savings and lending app for DeFi. It doesn't have to be quite as industrial strength as something like Aave, for example. Aave is pretty complicated. It's pretty sophisticated. Like, if you go look at the, repo. All right, let's just pull it up here. Like, if you go look at the repo on something like GitHub, it's a pretty sophisticated. You're talking about multiple files here. I mean, it's Aave v2. But yeah, we're talking about something that's pretty intense, okay? Now, if you can build something like this from scratch, I mean, you could write your ticket to work pretty much anywhere you wanted to, or, write your own application and, have those skills. But you could have something that approximates what it does, and that would still be good to show that you have the competency. Because at the end of the day, like, most places, if you're going to go get a job, they're not expecting you to build Aave, from scratch, like by yourself. It's like that's not really how it works. As I'm cutting in and out. Can everybody still hear me okay? The camera might be cutting in and out too. I don't know what's going on with my camera. Sometimes it just does this thing where it just decides to just like black out and zoom out. I'm not sure what's going on there, but so let's see here. Xerox Damien says sign for the boot camp. yeah, definitely. So we are relaunching the blockchain boot camp next week, next Thursday, July 14th. See, Damien says he's gone through and appreciate everything he's learned. Awesome. Thanks, Dalian. Taylor says, I'm currently building Aave V3. It's just like Aave, but it has a 3 after it. Awesome. Any projections on market recovery? Let's actually take a look at this. Here's an opinion, all right, on the CoinDesk. So the Bitcoin bear cross raises outlook for bull revival, and they say, yes, you read that right, an impending bearish crossover, a technical pattern theoretically suggesting continued weakness in the Bitcoin price could be a trap for sellers and portend a bullish reversal. So the 3-day candlestick chart showing the simple moving average, the SMA, of the past 100 candlesticks, okay, is on the verge of crossing the 200 candle SMA, all right, so basically blah, 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 blah. You can see what they're talking about here, that this bearish pattern could actually reverse here if it goes back up with the price. So again, I'm not a huge technical analyst, not a huge TA fan. I think TA definitely is useful and has its place. I think it just gets people use the wrong tool for the wrong job many times. I think TA is kind of useful in helping be an extra data point to confirm a larger thesis that's more based on fundamentals. Like it's just one, picture on the, sort of one data point in your overall picture of the space. I think the bigger picture right now is definitely what's from the fundamental side, what's happening at the broader economy, what's happening in that space. But that being said, we could just take a look here. The Bitcoin price. That being said, so one key level that I am watching definitely is this, man, if I can get this pulled up here, is this 200-week moving average right here, okay? Because this is definitely the moving average that, has always been hit in prior bear cycles, okay? Sorry, my computer's like starting to pinwheel on me. Let me just close these other windows. Too many Chrome tabs open. So anyways, that moving average is one that crypto's always hit in prior bear markets. Okay, that's sort of marked the bottom. Okay, so for example, like in the March 2020 crash, when the world started kind of unwinding because of, fears of the pandemic, at the bottom of the 2018 bear market, okay, we hit it. All right, let me just pull it back up here. You can see it always going to this level. And everybody thinks there's like this predetermined thing, deterministic thing that whenever we go into a bear cycle like we've seen recently, that we necessarily had to hit that. And we hit it, we crossed it, and we're below it. And so, I think it's a key level a lot of people are watching, okay? And I think getting above it, it's a step in the right direction, okay? I'm not trying to forecast what that means for the next month or two if we get above it. I'm not just saying we're ripping back off to all-time highs. I don't think that's the case. But here's the thing. If you're trying to call the bottom, you're trying to look for where the bottom is, we've been talking about a lot, that we've seen lots and lots of bottom signals in the crypto space. Going below the 200-week moving average, basically, social, Google trends going down like crazy, social engagement going down like crazy. You're seeing funds blow up. Okay, huge drawdowns in the Bitcoin price, or the altcoins down 90+%. Like, there's so many bottom signals around. Now, I'm not trying to like call the bottom, while it's happening, because I just don't think it's the right. It's a horrible risk reward scenario to try to do that. Right? It's like you've gained very little from calling the perfect bottom, and you risk a lot by trying to do it. So, but that being said, as you're just starting to think okay, so what are if we're seeing bottom signals everywhere, then what are potential, signposts of a recovery? Well, getting back above the 200-week moving average is a step in the right direction. Okay, starting to see some things in the broader economy that look less worse than they were the week before is a step in the right direction, right? So, I mean, we'll take any positivity that we can get. All right. So, getting back above that level, I think is a good first start. All right, because lots of people are watching it. Could this price level be the bottom? It very well could be, right? I'm definitely not trying to call that in real time. It doesn't make any sense. There's no real benefit in doing it. Have a song about this called "Catch the Knife." Somebody says, do I think that Solana phone is going to replace the iPhone and Androids? I don't know, but what are your thoughts on Solana phone? So we talked about it a little bit. We got a lot of ground to cover to replace an iPhone. I think the last time I checked, I think the Solana phone had 2,500 pre-orders. Let's just look. I saw because you can audit it on chain, I'm pretty sure. I saw a chart floating around. I tried to look it up, but I'm getting this site with a bunch of pop-ups on it. I think the pre-orders were not that many. So, I mean, yeah, I think we got a long way to go before Solana phone is an iPhone competitor. I've actually got a video next week coming out about crypto and mobile that you definitely should subscribe for. Because I think here's the other thing. I do think that mobile is a big part of crypto, kind of like the next wave of crypto adoption, and we need new wave of things to attract people back in the space and get interested and see the progress moving forward. I think mobile could be a part of that, okay, among many other things. And because we're seeing a confluence of new developments in that space, it's not just Solana phone. We saw this new thing with Ethereum phone with ETHOS. Okay, it's not a product I've personally used, so I'm not necessarily endorsing it, but they're having an operating system that you can install on an existing Android phone to run a light node and have your wallet on there. I definitely think that the holy grail is going to be just taking existing operating systems and being able to do this natively within those, because that way you don't have to, an iPhone user could just have a native wallet in the iOS integration, and then that could be plugged into other apps, but still have sort of a walled garden of the App Store that you have to play by their rules, which still sucks. So great questions, everybody. So that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. There really helps these videos out so more people can learn about blockchain. If you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? You can find those free courses on my YouTube homepage. They're like Udemy courses, but they're totally free. You like those, you want to take the next step, then you should definitely hold your spot for the Blockchain Bootcamp 2.0 launch next Thursday. All right, we're getting close, getting super excited. So there's a link down below to hold your spot today. So that's all I've got, and until next time, thanks for watching Dapp.